Today I brought this amazing trading strategy for you that has the potential to literally double your trading account. And the best thing about this strategy is it's very simple to set up and use, and it's based entirely on the price action in the market. So without any further ado, let's get started. But before we do that, please make sure to subscribe to my channel, as this channel is currently new and I'm trying to post consistently, bringing you new indicators and strategies every week. These are the three most important aspects of any financial market. First one is the momentum, which tells us which way the buyers or sellers are driving the market. For example, if the buyers have the momentum, they'll be driving the market in the bullish direction, and if the sellers have the momentum, they'll be driving the market in the bearish direction, as you can see in this case here. The second most important aspect is the trend in the market. For example, if the market is trending, then we usually want to take long positions, and if the market is trending in the bearish direction, then we want to take short positions, because then sellers have momentum and they're driving the market in the bearish direction, so we'll mostly be taking profit in the sell trades. But if the market is ranging, as you can see here, we usually want to avoid these situations, so determining the trend in the market is very important as well. And third and most important thing in any financial market is the volatility, because volatility tells us how much volatile the market is and if our orders are gonna get fulfilled or not. For example, if we take a long position at this candle here, then we'll mostly hit our stop loss because there might not be enough volatility. So we want to enter the market when there is high volatility at places like this, so that we'll be taking a profit at the end of our trade. So now we have discussed the three most important things in any financial market. To get maximum out of these aspects, we're going to use three indicators. The first indicator that we're going to use is the exponential moving average. So let's go towards the indicator tab, and here we're going to search for exponential moving average, or EMA, and we're going to add this one to the chart. Now once the indicator is added, you can see it's drawing this blue line which tells us about the exponential moving average. Now we're going to go towards the indicator setting, and here we're going to change the input. So we're going to change the length from 9 to 200 because we want to use it as to filter out the ranging markets and to know about the momentum of the market. And inside the style, we're going to go ahead and change the color of this line, and we're going to increase its thickness as well so that we can see it a little bit better. Now once these changes are done, you can see that sometimes the price action is happening above this EMA line, and sometimes the price action is happening below this EMA line here. So for example, whenever the price action is happening above this EMA line, that would mean that the momentum is in the buyer's hands and they are driving the market in the bullish direction. And whenever the price action is happening below this EMA line, as you can see here, that means that sellers have momentum and they're driving the market in the bearish direction. Now let's go ahead and add the second indicator that we're going to use for this strategy. So the second indicator is the SuperTrend indicator, and we're going to go towards the indicator tab, and here search for SuperTrend, and we're going to add this one by Quant's Oscillator to the chart. Now this indicator tells us about the trends in the market. For example, here you can see it's plotting this green line, which means that trend here is in the bullish direction, and it's plotting a red line here with the sell signal, which tells us that the bearish trend is prevailing in the market. Now the indicator on its own does give us buy and sell signals, but we're going to filter out these signals by using the exponential moving average and the volatility oscillator to get better results. Now let's go towards the indicator setting, and here we're going to do some modifications. For example, we're going to uncheck all these buttons, and also we're only gonna keep buy and sell signal, and we're gonna move the position of these buy and sell signals. For example, we're gonna move the buy to the below bar and the sell to the above bar. So once these things are done, let's hit OK. Now let's go ahead and add the third indicator that we're going to need for this strategy. So let's go to the indicator tab, and here we're going to search for the volatility oscillator, and we're going to add this one by verify to the chart. Now this indicator is pretty cool because it gives us an idea about the overall volatility in the market. For example, whenever this oscillator goes above this upper line, that would mean that there is enough buy volatility and we can take a long position. And whenever the oscillator goes below this bottom line, that would mean that there is enough sell volatility and we can take a short position. Now let's go towards the indicator setting, and here we're going to uncheck these boxes. So we're going to keep these upper boxes checked, and we're gonna remove everything else, and we're gonna hit OK. Now the indicators have been set up. Let's talk about the trading rules for taking long and short positions. So to take a long position, following conditions must be satisfied. First of all, the price action should be happening above this EMA line, indicating that overall trend in the market is in bullish direction and the buyers have the momentum in the market. Secondly, there should be a buy signal generated by the SuperTrend indicator, and also Final condition is that volatility oscillator line should be above this upper line, indicating that there is enough volatility in the market. Once these conditions are met, we can go ahead and take a long position at the close of this candle here, and we'll be putting our stop loss at this last swing low, and we'll be targeting 1.5 restore ratio. So let me just go ahead and set our take profit level, and let me just forward play the market to see if this trade goes in our favor. So as you can see, our take profit level has been hit, and this trade is a profit of 1.5 restore ratio. Now let's go ahead and take a look at another example. So here you can see that first of all, there is the price action happening above this EMA line, indicating that the market is in overall bullish trend, and also there is a buy signal generated by the SuperTrend indicator, and on this candle where the signal is generated, the volatility oscillator is above this upper line. So all our buy conditions are being satisfied, and we can go ahead and take a long position at the close of this candle here, and we'll be putting our stop loss at this last swing low, and again we'll be targeting 1.5 restore ratio. So let me just go ahead and set our take profit level, and as you can see, once we set our take profit level, our take profit gets executed here, and again this trade is a profit of 1.5 restore ratio. Now let's go ahead and talk about the trading rules for taking short positions. The first rule is that the price action must be happening below this EMA line, indicating that overall trend in the market is in bearish direction and the sellers have momentum. The second condition is that there should be a sell signal printed by the SuperTrend indicator, and the final condition is that this oscillator should cross below this bottom line, and once these three conditions are met, we're good to take a short position at the close of this candle here, and we'll be again putting our stop loss at this last swing high, and again we'll be targeting 1.5 restore ratio. So let me just go ahead and set our take profit level at 1.5 restore ratio, and let me just forward play the market to see if this trade goes in our favor or not. So as you can see, our take profit level has been met here, and again this trade is a profit of 1.5 restore ratio. Now let's go ahead and take a look at another short position example. So for example, here you can see the price action is happening below this EMA line, indicating the overall trend in the market is in bearish direction, and also there is a sell signal printed by the SuperTrend indicator. And finally, on the candle where the signal is plotted, you can see that the volatility oscillator is below this bottom line, indicating that there is enough sell volatility. So all these conditions are met, we can go ahead and take a short position at the close of this candle here, and again we'll be putting our stop loss at above this swing high, and we'll be targeting 1.5 restore ratio. So as you can see, our take profit level is executed, and this trade is again a profit of 1.5 restore ratio. So I hope you were able to understand how by using this simple trading strategy you can multiply your trading account. Now if you have any special video request or you want to review a specific indicator, please mention that in the comment, and I would love to make a video about it. Also, please make sure to subscribe and like, and I will see you in the next video next week. See you guys. Thank you.